and welcome to Market Open Direct Connect, a webinar series for companies to tell their story, why it's compelling, and why it's an opportunity to invest. I'm your host, Stuart Walters, and we're joined here today by Jeremy Bower, the CEO of Reach Resources, ASX code RR1. Jeremy will run through the recent outstanding results of the company's Murchison South Gold Project in Western Australia, and will also participate in a Q&A post-presentation. Attendees will have the opportunity to ask questions, and you can submit those questions via the Q&A tab at the bottom of your screen. A recording of this webinar will be available on Market Open's and Reach Resources communication channels within the next 24 hours. So I'd like to introduce our guest, Jeremy. Welcome to Direct Connect, and over to you.
Thanks very much, Stu. I really appreciate the opportunity to talk through our Murchison South Gold Project, in particular the Blue Heaven deposit. It's been some work that we've looked into and had an expert consultant go over historical work since late last year. I might actually, I've got an announcement obviously up on screen for people to reference. I'd actually like to start by just scrolling through to the location. So just to orientate everyone, so these, I'm assuming everyone can see my cursor. So this is obviously our tenement package, and right here is the Blue Heaven deposit. There's been a significant amount of historical work done by previous companies, and that was obviously at much lower gold prices. So this project hadn't developed to this level because of that. So with this high gold price, and we all know it's at record highs right now, we obviously moved last year to focus more on this, and it's pretty good timing and a fantastic result to boot. So I just wanted to quickly just to orientate everyone. So of note, this is the Primrose Fault. This structure running along the eastern side of the red color, which represents the mafic material out on site. And so you can see there's a significant portion of this fault line that runs through our tenement package. So we've got the Blue Heaven deposit, where a lot of historical production came out of, in fact, for a lot of prospectors seeking high grade. There's a whole lot of gold veins which run north-south, which splay, their structures that splay off this Primrose Fault. And we also have the Pansy Pit, which is a secondary satellite pit, which we're doing some further work on. So now that's in people's minds, just in terms of what the area looks like, or the deposit bearing structures look like. Just want to run through the main highlights to start with. So the headline numbers, as you can see, and as no doubt people have read and understood, 681,000 tonnes, just under 3 grams per tonne for 61,000 ounces gold. 65% of that is in the indicated category, and that was, I've had a couple of questions from shareholders during the week, etc., because we had an inferred resource of a certain volume, and now we've come to a slightly less in terms of ounces. Why is that? Firstly, we've concentrated on a smaller part of that inferred global resource. So the pit that we have outlined on that figure I just showed is actually smaller in size than the overall global pit, if you like, that was done previously. But the main point of this work, one, to get an independent expert report on this, so it's something outside of the company, so we can, it's fully verified and trusted. But secondly is to move the confidence level from inferred to indicated. And that's really important to know, that we've got material that can be classified under the JORC 2012 code to a level that's de-risked. to a degree from the previous inferred category. And that's the process we're going to go through now, is just continue to de-risk this project. So that's been a big part of it. It's been a fantastic result. Majority of the ounces, in fact, are above 3 grams. There's some oxide, 5,000 ounces were oxide, which brought down the overall grade just under 3 grams. So it is what you'd class now as a high grade deposit. And clearly 60,000 ounces at a $5,000 gold price translates to a significant revenue. However, we won't get too far ahead of ourselves. This is the first step, and there are a number of actions we need to complete post this, but certainly to come out with an optimized pit. So this is one of the other key points to it. We've got mineralisation from surface. So when you see, I guess there's a lot of companies that are talking about their gold projects and delivering gold hits from drill programs. We've been able to show that we've got high grade material from surface, and this pit averages at about 150 meters below. So we're not mineralisation isn't starting at that level; it's starting from surface. So clearly that has major benefits when we move towards the mining and development side of this program. The process that Mining Plus went through in terms of producing this mineral MRE was to actually put it within an optimized pit and go through the RPEE process, the reasonable prospects of eventual economic extraction. And so that means that they've put some modifying key economic factors around the resource to give us initial understanding that this is, well, as it says, it's the possibility of economically mining this is real. And so they use a certain number of parameters, and that is within this announcement. I'm not going to delve into it. People can review those, and we could talk about that if need be. One of the significant points, as you see in the dot points on this announcement, it was assessed against a $3,500 Australian dollar gold price, not the current gold price. So there is upside. I think it's important to do these things at a conservative level. You know, we don't want to go right to the current price because we know movements can occur. So that does give us leeway. That does give us a springboard for potentially more ounces and certainly more revenue down the track. The other key point is the recovery. So it's all well and good having these deposits, but you need to obviously be able to recover the gold. So our initial test work was extremely encouraging, coming back at an average of 97%. So we put samples in from oxide, transition and fresh rock, low grade and high grade, and the average was 97% recovery through the bottle roll leach test, which is a key test. We will do more work, and that'll be coming up. Let's see other key points, which I guess really, when you're looking at these projects, you do have to think about as an investor and obviously as a manager. We already have a granted mining lease, so that's a big step or a time saving that you have compared to other programs if they're on prospecting licenses or exploration leases. To have a granted mining lease is a huge step forward, and enables us to get to production sooner than others that still require the process of actually obtaining a mining lease. The location at Paynes Find we're actually right on, this is the Great Northern Highway. So you can see the deposit or the pit shell there. There's obviously extensions, as I've sort of pointed out with this Primrose Fault and these splay structures, but the ability to move that material and get straight onto a sealed road and heading north or south. There's a number of mills within a close range to us. Mount Magnet's about 140 kilometres to the north, and there's a significant mill 75 kilometres to our north. There's another one similar distance to our south. There's another one approximately 55 k's to our west. So we're in conversations with each of those companies, and that's clearly a really good benefit for us to be in such a great location. There's accommodation on site. We have a good relationship with the owner of that roadhouse and accommodation area, with fuel, etc. So they're all factors which I guess you've got to consider when you're looking at these projects, and how efficient they can be, how cost effective they can be, because we're in the game of making money for our shareholders and doing it as quickly as possible. Stu, I'm happy to take questions whenever you like. I think there's a couple that are coming through.
Yep, thanks, Jeremy. Fantastic, recap of last week's significant news. We have had some questions come in, so I'll get straight onto those. Can you talk about the structural controls that define the mineralisation at Blue Heaven, particularly the significance of the deep, steeply west dipping quartz veins and their continuity along strike?
Sure, I'll do my best. I'm not the geologist in this operation. I have David Sioikis, who's our principal geologist, who would be much more adept at answering that. However, there is a main structure, as I pointed out earlier, that runs through tenure, and that is the Primrose Fault. There is another, and that is a main conduit for fluids. Off that, however, you mentioned the quartz veins. They are splaying off that main structure and have shown to be mineralized. So I don't think we need to comment on the dip of those, but certainly we know that Primrose Fault is the main structure to bring fluids in, and then these quartz veins that are splaying off that certainly have shown to be mineralized. My understanding from David is there are some other cross-cutting structures that could be mineralized, but in essence, Stu, we understand where some mineralization has come in and have identified that clearly through this MRE, but further work is required to see what other structures could be mineralized, and that'll come through a diamond drilling program that will feed into understanding of structures, more metallurgical testing, and importantly geotechnical stability, because we'll focus around the pit edges to make sure that when the engineers are putting that design together, that we have the right angles and slope.
The announcement mentions mineralisation starting at surface and being open at depth and along strike. What are the implications for further resource growth?
Okay, yeah. So the best way to explain it, so certainly we have mineralisation from surface. This cross section, is one of the cross sections through the ore body, or through the optimised pit, I should say, that gives you a great visual interpretation of that. You can see that the mineralisation that has been modelled does extend below the pit. You can see it in this 3D image as well. The colours are indicative of the resource category. So there's a lot of the red, which is the indicated material within this pit area, and then there's a significant amount below that. From a resource growth, that's immediately around the actual optimised pit. We know that there's further ore at depth. We know that there's further, and if I go back to that main structure, that main figure, sorry, we know that it's open to the north. So following this area and these quartz veins to the north. So when we say it's open, there's been very little or no exploration following that to the north. There's some, and a lot of these old historical ones out here are very shallow air core drill programs, so they haven't been able to, they haven't gone deep enough to identify further mineralisation, and out there we feel where we should be sticking towards or closer to this fault line. It's the same. There's actually gaps in between the actual pit itself, for example, in this area, and it continues to the southeast. In saying that, you know, we could be looking in this area around the Pansy Pit, south and north of that, but we're not, before we get carried away, we're not planning on spending a huge amount of money going and exploring. Our focus is primarily on developing this Blue Heaven deposit here. We want to get that in, we want to get in there as quick as we can, and monetize it as quick as we can, and use those funds to then go and attack these other areas. It's the Murchison South Gold Project, so it's a big, we believe it could be a big gold project going forward.
With metallurgical recoveries averaging 97%, how confident is a company that it would translate to a large-scale recoveries in a commercial setting? And are there any potential scale-up risks?
So the metallurgical testing that we've done so far has been across a low grade, high grade, oxide, transition, and fresh rock. And as you've seen, that's come in averaging 97%. So that's really strong. The question I think was, is there any large scale up risks? There's always risks, I guess, when you're scaling from a level that what we've done to a bigger scale, but that's why we then go in and do more testing effectively. So we'll go through, there will be some grade control drilling. There will be, as I've mentioned, we'll do more metallurgical testing via our diamond drill program. And that's all, as I said at the start of this, what we do from now, we're trying to reduce risk as much as possible to maximize returns. We want to make this bulletproof, this project. So, and I'm a scientist from background, and I like to understand the data, and I want to make sure that we're not throwing away money here. So there are risks, of course, but we'll do everything we need to do with the advice of experts and obviously under the guidance of David to make sure that those risks are managed.
With processing discussions underway, can you share more about the types of arrangements being explored and any proximity to potential mill partners?
Yeah. So at this point, we would be favouring a toll treating arrangement. There are a number of mills in the near vicinity to us. So we are going to have conversations with each of them. It makes sense. It's like anything. We want to reduce our risk. We want to make sure that we're getting the best bang for our buck. We want to have a win-win relationship with that partner. So I think I mentioned previously that within 50 to 100 Ks, there's 4 or 5 different mills. We will do a financial analysis across this to make sure that is the best way to go, by the way. It's very unlikely at this point that we're going to go and look and see big amounts of debt and put plants on ourselves, but we'll do an analysis across this. At this point, we're looking at toll treating. It makes a lot of sense for a small company like us to have those arrangements, especially with mills in the near vicinity.
How much additional resource could potentially be unlocked if re-optimized at the current price, obviously around 5,000, where the MRE was conservative at 3.5?
So saying that we've got if we ran the same numbers at 5,000, yeah, we would get more ounces, or we would certainly get more money or more revenue. I haven't done that in that regard. We know there's more potential for more resource, for more tons, more ounces at this site, but our focus right now is just on this optimized pit and taking that to the next level of an engineered pit design and actually digging it out of the ground. So if this gold price is still at 5,000 when we're digging it out or better, then we'll take whatever cash comes as a bonus.
You discussed this a little bit earlier, but what is the significance for you of having the deposit located on a granting mining lease with direct access to infrastructure like Great Northern Highway? How does this reduce time and cost of the development?
Right. Well, to apply for a mining lease, there's a significant time delay, basically. So if you've got a project that's already on a granted mining lease, roughly, you could say 12 months ahead of someone who doesn't have a granted mining lease. There's various steps you've got to go through to have that granted. So it's a huge advantage. It's a very disturbed area based on the previous work that's done out there. So, and there's already been heritage looked at. We will do further work on heritage and flora and fauna. However, we're confident that we can manage those as other key permits and approvals. So in terms of where this sits at, it's a really, I guess you could call it's an advanced project because of the nature of having a granted mining lease, because of the knowledge of what we know in terms of other permits and approvals and the processes to go through. We know that we can get through those relatively quickly. The other part of the question was around the transport and logistics. We are right on the back of the Great Northern Highway, so it's a very good road, obviously being the Great Northern Highway, so it costs a lot less when your distance is reduced compared to having big haul roads and distances to go from mine pit to truck to mill. So having a shorter distance means less cost, more revenue in the pocket.
How soon do you anticipate production to begin, given the mining leases in place, and will we see production in 2025?
Well, that's a good question. Look, I think we will be ready certainly before the end of the year, but we need to have a mill arrangement. You sort of need to work a bit backwards from here. We're at the moment we're moving towards we've already had discussion with one group. We're looking at meeting with another one very soon. So as soon as we can lock down our processing option, and we can work back from there, then we move forward with all these other processes. In terms of getting ready, we need a mining proposal approved. We need a project management plan approved, and obviously partnerships with a mining services group to actually get it out of the ground. But we're being mid-April now. There's certainly potential for us to be moving dirt before the end of the year, I would say. It's just going to depend how we line that up with our toll treatment or processing option and where that fits in.
And a follow up to that, when do you plan to start a diamond drilling program? Sort of how many holes and meters are you looking at?
That's something that we're finalising at the moment. So we're working with Mining Plus and a geotechnical engineer to make sure that we're covering all the angles we need to for engineering design. We also need to make that cover metallurgical, and we'll also be doing some of that work at our Pansy Pit as well. So it's not quite finalised, but it should be within a month.
What are the prerequisites prior to engaging mining contractors, given that you now know or now have pit resource confirmation?
Prerequisites to engaging a mining contractor. So I guess there's a couple. So they have, for us, in terms of, and they'll have different levels of risk that they're willing to accept. We believe that the work that's been done is sufficient for us to engage a mining contractor and for the mining contractor to accept this project as being able to take it to the next step and work towards development. So we believe, I guess, to answer that question, we've met those prerequisites. For us now, it's for us to then choose the right partner within that relationship, and also the right model. And that then comes down to how much risk and capital we're willing to put in as opposed to them, and how that profit share or that revenue is allocated on the back end.
How does the upcoming mineral resource estimate for the nearby Pansy Pit fit into the broader Murchison South development strategy? And could Blue Heaven and Pansy be developed concurrently?
So how does it move into the strategy? Well, it's going to add more ounces. Just to manage expectations, you can see the size of the Pansy Pit there compared to the Blue Heaven. So we're not, people don't want to get in their heads, we're going to double the amount of ounces now. And this is backed off historical results. We've done no extra drilling down at Pansy, but we need to put that into a JORC 2012 compliant mineral resource estimate to show that it's real, to show that it's independent. So the strategy, or part of that strategy, is that there is more ounces. It also gives another precedent to show that this Primrose Fault is gold bearing, or is certainly part of the mineralisation answer to this project. So we know that there's further extensions to the Pansy area, and that's a massive bonus for us. We are doing everything we can to develop those at the same time. Absolutely.
How does Blue Heaven compare with other shallow open pittable gold projects in WA of similar grade and scale? And what makes this a standout to us as investors?
How does it compare? Well, I think it compares pretty favourably. Certainly in terms of, I've only looked at work that's been done recently through companies like Auric, Horizon, etc., who have similar sort of focus or model that we're looking at in terms of partnering with mine services and toll treating. So I can only say that those companies have been able to make significant amounts of money. I haven't looked in detail in terms of comparing the geology of our pits versus those, just in terms of the I guess the practical side and commercial side of how those operations have been run, and feel that this is, I think with our grade is potentially better than some of those. which is always good. And I guess that we're pretty confident of where this is at, knowing that this mineralisation is from surface. We've put some initial economic factors around this, which have made it, very popular, I guess, amongst investors to have a look at. So, look, we're really encouraged by where everything's at, and really see it as a near-term monetizing option for us.
Jeremy, lastly, I know this has been the focus for you as the Murchison South Gold Project, but you've got a couple other projects as well. Can you just give us a bit of a timeline on that and where that's at the moment?
Yeah, sure. So, yeah, we have a couple of different levers, I guess, you can pull, which I think is really important to have a diversified strategy as a company. We've certainly shown that in the last, 12, 18 months, where lithium was all hot, but we always had this gold project as our hedge, I used to call it. Not in a traditional gold hedge sense, but just being able to have that ability to move from one operation to another. And as you've seen, we've done here. That project is being managed, as I'm sure most people are aware, by Delta Lithium. They're still exploring at that project. We got a significant amount of funds in through that arrangement. So that's just progressing as they continue their exploration pathway. Our Wobbly Creek project, we did our initial drill program down there and believe we discovered an asset. That's another lever we'll pull if and when the rare earth prices come back. But for the moment, that's something that we're doing a little bit of work in with one of the unis on the side, just to understand that better. A bit of research. We know that it's a potentially large scale project, rare earth project, if and when that commodity or those commodity sets come back in. So there won't be a lot of work done on that project this year because we've spent all we need to up there at the moment. Our focus is on gold. And then the northern blocks, we will do a small program up that way on the manganese just to flesh out the high-grade areas that were identified previously. David wants to have a look at other minerals within that area. He feels there's potential for something out there. And as part of that, there are some other rare earth options and hits that were on a couple of the tenement packages closer to the Wyloo Hastings project. So it's minimal expenditure to meet minimum expenditure on those projects effectively, and just to try and flesh them out, wrap them in a bow until that time that we need to pull a lever, or that lever, suggests we should be pulling it. All focus is on gold for us. Murchison South Gold Project is 2025 and beyond for Reach Resources.
Jeremy, thank you. That's all that's come through today. Appreciate you running through the details of last week's announcement, just to give some more context. Some great questions from attendees, so thank you for sending those in, and appreciate you taking part in the extended Q&A. For more information about Reach Resources, you can head to the company website, reachresources.com.au, or you can follow the company's social media channels and investor centre. Jeremy, thank you for taking part in this today. Wishing you all the best. Keep up the great work, and look forward to chatting again soon.
Thanks, Stuart. Thanks for everyone who's sending questions. Much appreciated.